good evening. The International Monetary Fund has lauded India's direct benefit transfer as a logistical marvel, a scheme which has reached hundreds of millions of people, specifically benefiting the women and the farmers of India. The World Bank Group, in fact, urged nations to adopt India's targeted cash transfer approach, saying that India managed to provide food or cash support to a remarkable 85% of rural households and 69% of urban households. Digital innovation aside, over the last 11 years, the Modi government has overseen a significant transformation of India's economic landscape, combining infrastructure expansion and fiscal discipline. Landmark reforms like the GST, the Insolvency and Bankruptcy Code are seen as measures which have modernized the economic framework and improved transparency and efficiency. So what has been the key highlights and what are the challenges going ahead? Over the next 30 minutes, I will decode that. Joining me first on the show is Sanjeev Sanyal, economist and a member of Prime Minister Narendra Modi's Economic Advisory Council. Mr. Sanyal, really appreciate your time. India has emerged as one of the fastest growing major economies, but there are global uncertainties from supply chain realignments to geopolitical tensions. This is certainly testing India's resilience. So, according to you, how should India strategically position itself to both shield its economy and also at the same time seize new opportunities in this shifting global order?
So let me say that as our ranking goes up, now we are the fourth largest economy in the world. In around 18 to 24 months, we'll be the third largest economy in the world, going past Germany. In relative terms, if you're talking about us being the world's fastest growing major economy, there it doesn't matter because you see these global uncertainties affect everybody. If we are growing a little bit slower than we would have otherwise, so is everybody else. Where it matters is in terms of the absolute level of growth. So rather than growing at somewhere in the 6.5% range, we would much rather be growing at 7.5%, maybe even higher. That is difficult to do when your export market is this uncertain and various global supply chains are breaking down. So under those circumstances, we have to be a lot more constrained from our macroeconomic policy mix. We have to be much more careful about what we do with our current account, inflation, and so on. And also we have to be very, very careful about what happens to global capital flows. So yes, you're right, we have to be careful. But at the same time, if you're looking at a slightly longer horizon, it does come up with certain opportunities. For example, the liquefaction of global supply chains means that we can insert ourselves into it. So if you look at all the free trade agreements that we are now pushing for, we have obviously done quite a few in the recent past with Australia or UAE, and then more recently UK. We are now pushing for something with the European Union and the United States. So no matter what cards are being played to us, we will have to sort of play those cards as they come. And so, we would have loved for this to be a very benign external environment, but that is not what is the case. So we will have to do as best as we can under the circumstance.
That's right. Mr. Sanyal, only recently India signed a significant FTA, which was, of course, done a day before Operation Sindoor. And that particular bilateral understanding actually marked a significant milestone between India and UK. It was seen as a comprehensive deal and it concluded after 3 years of negotiations. It will be seen as a big shift between India and UK. Do you think these are signs of India identifying newer markets, understanding fully well that there is a completely different challenge coming from US and an administration which cannot be trusted in long-term business relations?
I wouldn't interpret the uncertainty caused by recent US actions in quite that way. To be fair to the US, they have not disrupted us quite as much as comments from President Trump may suggest. So 2/3 of our exports to the US come from services which have not been affected. Of the 1/3 that is goods, if you look at pharmaceuticals or some of the other products, they're also not affected. Even the comments on mobile phones and so on, so far, actually hard tariffs have not been placed on them. That doesn't mean that the world has not been disrupted, but it has. And that disruption would have happened whether or not President Trump had won or not, because the old system simply was not working for many people, including India. And so, in some ways, this is something that we should have expected and anticipated. So, in that context, let me say, with the global multilateral trading system of the WTO under stress, our attempt is to take advantage of the new situation that has come. So, yes, we have signed one with the UK, but that is only one step. We are, in fact, pursuing aggressively free trade agreements with the European Union and, very importantly, with the United States itself. So I think, in that context, let me say that we will end up with global supply chains changed, and India intends to fully exploit whatever opportunities come out of this.
Okay. In the last 11 years, Mr. Sanyal, the Modi government has implemented several ambitious reforms. Yet there are concerns around execution at the state level and also private sector participation. So I want to understand from you, how can India really bridge the policy to execution gap to ensure inclusive growth in the coming decade?
So I think there's a whole bunch of things we have done. In fact, if you ask me the big changes that have happened over the last decade, they would include the following. One is the management of the Indian economy through the COVID crisis, which I think was very different from other countries, but turned out to be much better than most Western countries, but also what people thought we would be able to do. We have recovered from it quite strongly, as you know. We introduced the Insolvency and Bankruptcy Code, which created for the first time a system of creative destruction, and it helped clean up the banks. The GST system, which, for the first time we ended up with a unified market in India. Then there is the inflation targeting framework, which has clearly brought down average inflation in India by at least 300, 400 basis points. Now, in each one of these cases, can one improve upon them? Yes, we can. The GST will remain a work in progress, and we can keep making it more efficient. As my late colleague Vivek Debroy would argue, we need to simplify the rates from the multiple rates and reduce the numbers of them. And I agree with that. Similarly, the Insolvency and Bankruptcy Code, we have had certain disruptions caused by a recent Supreme Court judgment. I think we need to smoothen things out, make it work much better, and give certain amount of certainty in the framework of insolvency. Absolutely critical for the creative destruction needed for a risk-taking economy, and so on and so forth. So each one of these things will remain work in progress. It's not like you do a bunch of reforms and then you go home. And I'm a big proponent of something called process reforms, which is the myriad small reforms that are needed in order to make our economy more efficient, improve ease of doing business, ease of doing living, whether it's in our, the ease of being able to withdraw EPF money or, get hold of our shares from the investors' education and protection fund, and so on and so forth. All of these are small reforms in their own space, but we literally need to do thousands of them. And so this is something that we have to push. And, if it requires us sometimes to, cause disruption, so be it.
Okay. Before I let you go, my last question, and this comes from the coinage that you just did of process reforms. Which, according to you, in the last 11 years has been that singular biggest achievement of this government in terms of process reforms?
So first of all, the whole point about process reforms is that none of them are singular big achievements. They're all small to medium reforms, but there are large numbers of them. Whether it's smoothening the way the patent system functions, or, for example, simplifying rules for drones from 77 permissions that drone flying required down to 7, or opening up the geospatial mapping sector. All of these are process reforms. Now, outside of those small sectors, nobody knows about them. When you remove OSP regulations, from the telecom ministry that helps the BPO IT-enabled services. Nobody else may even care about it, but it radically changes the game for that sector or that activity. And so I have been a advocate that while we do need to do structural reforms from time to time, and things like GST or IBC or inflation targeting are necessary, a very large part of the weight of what needs to be done are actually these process reforms. And there are literally thousands of them that need to be done. For the most part, there is no ideological debate or political debate about them. Somebody needs to just get up there, do the hard work of digging them out, make the change, see if the change had the required impact or it had some unwanted, unintended consequence, and just keep at it. It is hard work. And of course, as you know, a deregulation commission has been promised in the budget this year, so we should expect to have something in those lines in the next few weeks. So in that way, the idea is that this is a continuous process. You have to hammer away at it. This is not about doing one big structural reform and getting cheered on for it.
Yes. It's about reforms and continuity. Thank you so much, Sanjeev Sanyal. Always a pleasure speaking to you. Thank you so much for joining us on this special show. And joining me now is Dr. Sajid Chenoy, Managing Director and Chief Economist at JP Morgan. He is also the part-time member of the Economic Advisory Council of Prime Minister Narendra Modi. Dr. Chenoy, appreciate your time. According to you, in these 11 years of Mr. Modi's government, what do you think has been the big bang economic idea or economic advancements, according to you, which has been really defining?
Well, there have been several areas that I think there's been a big focus on. I think the first thing which doesn't get enough appreciation because the focus is very much on growth is just the institutionalization of macroeconomic stability. I think one has to remember that in 2013 we had the taper tantrum. India was a member of the Fragile Five. Some excesses had built up. And so from my perspective, the institutionalization of macroeconomic stability, because I think, macro stability is the bedrock on which growth will prosper over long periods of time. Now, what does that entail? I think there was an inflation targeting regime that was started in 2013 and continued under this administration, which I think has been really important in anchoring inflation expectations, which then has an impact on, how on the currency. I think there has been for many years now, for perhaps since 2013 itself, a focus to build reserves, and India has gone from $270 billion to occasionally upwards of $700 billion. We've seen fiscal policy has been responsible. The government's very focused on debt and ensuring that debt doesn't reach unsustainable levels and debt levels come down. And what all of this has done is allow India to actually buy some monetary policy independence. We're at a time where the global environment is extremely volatile, extremely hostile. We've just come off the sharpest monetary tightening cycle, in the last 40 years, over the last 2-3 years. But having this macro stability allows India's central bank to deviate and retain some independence. And so if you look at Indian interest rates compared to US interest rates now, they've been able to come off. That differential has come down, which I think is the ultimate testimony of macro stability. So I know for others will talk about various other areas that have been impacted. I would argue, cleaning up balance sheets, the bankruptcy law, cleaning up the banking system has been crucial as well. GST clearly has been very important. The big push on public investment, in the pandemic is just getting on, and I think will have effects going forward. So there are many different areas that the government has focused on. But I think we should also not forget to underscore what 10, 12 years of macro stability can do in terms of growth. The last thing I'll say is this is very much a work in progress.
Okay.
We have no time to be complacent. There's a lot more that needs to be done.
Dr. Chenoy, Niti Aayog CEO, Mr. Subramaniam, recently declared that India had overtaken Japan to become the 4th largest economy in the world. Of course, his claim was based on data which came from the International Monetary Fund. But this claim has led to fairly divergent reactions. Which side of the debate are you standing on?
The inevitability that India will cross Japan, sometime this year or in the near future. I think just given the difference in growth rates, that's going to happen. For me, the question now, what are the implications of that? And I think the first thing that points to is the magic of compounding, right? The fact is, since 2000, India's growth rate in dollar terms has grown at 9.5% on average for the last 25 years. Now, that's what we should be taking comfort from, that for 2.5 decades, we've been able to grow at nearly double digits in dollar terms. And when you grow at that level, essentially, grow at those rates, you're doubling your level of output every 7.5 years, right? And so, essentially, we've seen 3 doublings that have happened, in the last 25 years. So I think that, for me, it's really the process that led to this that needs to be focused on. 2 points I'll make. Why does the size of nominal GDP matter, which is 4 trillion? Because the size of the market matters when multinational companies are deciding which markets to set up in. We're in a very turbulent global environment where there is a recalibration of supply chains happening around the world. And the fact that India's got this large and growing market will serve as a source of attraction. Having said that, we should also be cognizant that, from a quality of life perspective, what matters is per capita income. India is still below $3,000 per capita. We have a long way to go to move to middle income status and to high income status. And so there needs to be this relentless quest for growth and a relentless quest for reforms. I think once that happens, all these other kind of landmarks will take care of themselves.
Okay. One view and one achievement of this government, Dr. Chinoy, has of course been about improving the ease of doing business. In fact, if we were to look at World Bank's ease of doing business index, India has climbed, places. India climbed 6 places on the World Bank's Logistic Performance Index 2023, now ranking 38th in the 139 countries index. But still, there are questions being raised, particularly with regards to foreign direct investment. Where are we not getting the picture right?
This is very much a work in progress. And all of these reforms are a continuum. We've started down this path. We've got ways to go. Why is ease of doing business so important at this particular juncture? Because I can't emphasize enough, in a way, the opportunity that the current trade war is creating for India. We're in a situation where, notwithstanding what happened a few hours ago, you may have heard that a US trade court has blocked Mr. Trump's reciprocal tariffs. Now, the Trump administration will inevitably appeal that. And so let's see how that pans out. But it's clear that US and China, are now going to be structurally competing economically. And, we may well see sustained high tariffs in China. That is going to accentuate this China plus one desire on the part of firms. What's different about this trade war and the last trade war is last time a lot of that FDI investment actually went to neighboring Southeast Asian economies. It went to Vietnam, it went to Thailand, to Indonesia, to Malaysia. This time what's happened is that the Trump administration is equally focused on Southeast Asia because they recognize that if tariffs in China are high, a lot of Chinese exports will simply find their way to the US market through third countries in Asia through what's called transshipment. And it's those transshipment fears that is going to make it hard for some of these Southeast Asian economies to strike deals with the US. My point being, we may well be in a situation in the coming months that these tariffs, both in China and Southeast Asia, may remain quite sticky and elevated. This is India's opportunity because there will be a fair amount of trade diversion. And therefore, it's really crucial that India try and conclude a trade deal with the US as soon as possible, remove that uncertainty. Because if you do, then when you talk about China plus one in this trade war, India comes across as being very attractive. Right? So the push factors to push FDI towards India in this trade war are very powerful and compelling. We need to complement that with more pull factors and more sustained reforms.
What are these pull factors you see will be playing out in the next few years?
So I think first and foremost, we need, because we're now in a world with lots of trade frictions, we need to give multinational companies the comfort that they will have relatively frictionless access to third markets. Now, India has done very well to strike a trade deal with the UK. Hopefully, we can conclude a trade deal with the US, and hopefully, we can even conclude a trade deal with the Euro area. Once you have trade deals with these three large blocks, then multinational companies know if you come and set up in India, you get relatively frictionless access to these markets. Number one. I think in addition to that, the last few budgets have begun the process of rationalizing import tariffs. I think it's important that we continue down that path. If we want to better integrate into global value chains, then we have to recognize that there's so much, intra-industry cross-border trade that an import tariff is very often tantamount to an export tax. It's the oldest theorem in economics, the Lerner symmetry theorem. So we need to make sure that we reduce those import tariffs. Now, the challenge is going to be, how do we rationalize import tariffs and yet ensure that we don't get dumping from China? So we have to strike a very delicate balance. And thirdly, I think, the process reforms, the ease of doing business reforms. In particular, I think that, labor codes, the government's done well to move to 4 easy labor codes. I think working with the states to implement that will be important, because many of the opportunities that come up from Southeast Asia may well be in the labor intensive sectors. I think India's biggest focus in the coming decade needs to be, how do we make our growth more labor intensive? How do we rationalize or reduce the high capital labor ratio that's developed around the world in the last decade? So I think, promoting those labor market reforms, ensuring more labor market flexibility will allow us to capture the opportunities in labor intensive sectors that emanate from a Vietnam or from Southeast Asia or from China itself.
All right, Dr. Sajid Chinoy, pleasure speaking to you here on the special show of NDTV. Thanks so much for watching. And let me go straight to Raleigh in North Carolina. That's where William Bader is joining us. He is independent economic advisor and former professor of economics and chief economist at Citi. Mr. Bader, really appreciate your time. As someone who watches India and Indian milestones, what do you think has been the big milestone in the domain of economics which has been taken by Prime Minister Modi?
Well, the most recent impressive achievement was the fact that India is now the 4th largest economy in the world. It's overtaken Japan by size. Now, we must be somewhat careful because this is, of course, not the same as GDP per capita, per head of population, because there, India still remains in position 136. There's a whole lot of stuff to be done. Incidentally, if you look at GDP, the measure of economy size that people use, but correct for the fact that non-traded goods are much cheaper in lower income countries than in advanced economies, then India, with GDP in what we call purchasing power parity units, PPP units, then India is already in 3rd position. China is 1 there, US 2, and India 3. If it's regular GDP, not correcting for these differences in non-traded goods prices, then the US is still far number 1 at 13.5 trillion, and China number 2 at 19.2 trillion, Germany number 3, and as I said, India very impressively in 4th position. And I think it will have some time still to overtake Germany in the not too distant future. So this is a very impressive achievement.
Yes, absolutely. We have been speaking to several experts, and they have, of course, various. They have talked about various achievements, and you talk about certainly what the announcement came from the chief economic advisor. But Mr. Bader, let me give you some numbers in terms of the groundwork which has been done by the country, in terms of the achievements through direct benefit transfer, which has benefited the women, the ease of doing business index, all these parameters. Do these make for a great India story for the world outside to invest in India?
I do think so. India clearly is, in my view, going to be the high growth country of the next few decades. It has, of course, the demographics, it has a good location, but most importantly, it has taken the measures to enhance education, to enhance regulation, to have a tax regime that is not too negative for business. It has taken the steps also to educate the population, including the female population, better. So it is right on the way to become the growth performer of the next decades.
Last question to you. If India is the country of interest and country of curiosity, particularly for economists as to what India has achieved, and of course, the infrastructure push which we have seen, particularly in the last 10 years, which has been driving the economy in many ways. It's moving away from big cities to smaller towns, which are becoming economic hubs as well. What do you think will be the big challenge going ahead in the coming few months and years?
Well, there still remains some serious work to be done on the infrastructure side. Yes, things have improved, but there's a lot that remains to be done. The main challenge, I think, is to ensure that higher levels of education are achieved by a larger part of the population, and especially the female population. Education, training, making people ready for the AI revolution.
Yes.
And India can do that, but it will require continued effort and continued public spending also. And also, doing something about possible social barriers to greater integration of females in the top of the labor force.
All right, William Bader, really appreciate your time. Thank you so much for joining us. William Bader, really appreciate your time. Viewers, you heard all three experts and they had some great things to say about the Indian economy, the path it has taken, and what are the challenges going ahead in terms of reaching the big target for Viksit Bharat 2047. We are putting out this entire discussion on ndtv.com. That's all from me. Thanks so much for watching.